Hi, this is Victoria from crushcrypto.com. In this video, I will be discussing the regulatory framework concerning cryptocurrencies in Switzerland. The country adopts a progressive approach towards blockchain technology. This is part of our new educational series where we will be looking at the regulatory framework for the major crypto hubs globally. Switzerland, according to its Federal Council report, classifies cryptocurrencies as a digital representation of a value which can be traded on the internet but not accepted as legal tender anywhere. Therefore, the country regards cryptocurrencies as assets or property, and cryptocurrency and related exchanges are legal in Switzerland, subject to regulations. There are currently no crypto-specific regulations in relation to trading and offering in Switzerland, but cryptocurrencies remain subjected to relevant existing regulations such as tax, money laundering, and securities. Recognizing the barriers of the existing regulatory framework to new financial technologies such as cryptocurrency, regulatory amendments were made by the Switzerland government to create a regulatory sandbox in support of the development of such technologies. Overall, Switzerland is one of the countries that adopts a progressive approach towards cryptocurrencies and blockchain technology. It has relaxed its regulatory framework to balance the technological development and protection of the public from associated risks. Securities in Switzerland is governed by the Swiss Financial Market Supervisory Authority, or FINMA. They are guided by the Financial Market Infrastructure Act, or FMIA for short. FMIA defines securities as standardized certificated or uncertificated securities, derivatives, or intermediated securities which are suitable for mass standardized trading, meaning they are publicly offered for sale to more than 20 investors. Essentially, assets that represent debt or equity claims on the issuer with investment purposes are considered securities. This means whether a cryptocurrency is deemed as securities depends on its categorization as a payment token, utility token, or asset token as per guidelines published by FINMA. Based on their current definitions, payment tokens are tokens which are intended to be used now or in the future as a means of payment for acquiring goods or services, or as a means of money or value transfer. They do not give rise to claims on their issuer. Examples include Bitcoin and Ether, which FINMA does not perceive as securities. Utility tokens are tokens which sole purpose is intended to provide access digitally to an application or service by means of a blockchain-based infrastructure. And asset tokens represent assets such as a debt or equity claim on the issuer. For example, asset tokens may promise a share in future company earnings or future capital flows. In terms of their economic function, these tokens are analogous to equities, bonds, or derivatives. Tokens which enable physical assets to be traded on the blockchain also fall into this category. So according to FINMA's definitions of cryptocurrency, those that fall under asset tokens would be deemed as securities. Asset tokens are regarded as standardized uncertified securities or derivatives. Therefore, issuers of asset tokens may be subject to prospectus requirements under the Swiss Code of Obligations. The Banking Act governs the deposit of money in banking institutions. Generally, the issuing of tokens is not associated with claims for repayment on the issuer, and therefore these tokens will not fall within the definition of a deposit, and a banking license is not required. However, if there are liabilities of debt capital characters, such as promises to return capital with a guaranteed return, like lending tokens, the funds raised are treated as deposits and the issuer will likely have to obtain a banking license. Those who issue or manage a means of payment in Switzerland is a financial intermediary subject to the country's Anti-Money Laundering Act. Issuers, operators of exchanges, and custodian wallet providers of payment tokens as a means of payment under the blockchain infrastructure are therefore subject to this act. This may be the case at the time of the ICO or only at a later date. FINMA, as noted in its published strategic goals for the period from 2017 to 2020, aims to further support innovative business models in the area of financial services. They intend to remove unnecessary regulatory obstacles and introduce specifically tailored authorization categories. Cryptocurrency and its underlying blockchain technology appear to be welcomed in Switzerland. This has propelled Switzerland as a major player in this space. With a balanced approach, Switzerland will continue to crack down and issue warnings to the public in relation to fraudulent crypto-related projects and companies to promote a healthy environment for genuine projects to prosper. Thank you for taking the time to watch this video. If you haven't already, please subscribe to our YouTube channel, follow us on Twitter and Facebook, and join our Telegram group to receive our latest in our educational series and other updates. The invite link to our Telegram channel can be found in the video description. Hope you have a great day.